Hey, everybody, it's Russell Gray, co-host of the Real Estate Guys radio show, here for another edition of Boots on the Ground. And we're talking precious metals today with our expert friend, Dana Samuelson from American Gold Exchange. Hey, Dana.
Hi, Russ. How are you today?
I am doing great. I'm excited to talk with you. You know, precious metals have had this epic run, especially silver. And it's not just been going on recently, although it feels like it's been going on recently. But I read a study the other day that said that precious metals were like number one and number two, like gold and silver were like number one and number two since the turn of the millennium. I mean, since the turn of the century, right?
Yeah, if you measure that far back, yes, absolutely. As paper money has lost its purchasing power on a steady basis year after year after year, gold and silver have just been able to buy more and more. If you
Yeah.
look at it that way.
Well, you know, I heard Robert Kiyosaki talking the other day on his radio show, which was excellent, and he was just commenting that he looks at, uh, you know, he always says savers or losers, but then he turns around and says he saves, but he saves precious metals. He considers precious metals money. You know, we talked a lot about this in our silver series that we did, which if anybody's interested in seeing that and hasn't seen it, just send an email to silverseries@realestateguysradio.com and we'll give you the link to it. But anyway, so he was talking about how, you know, he just accumulated precious metals over time and that used it for long-term savings. So the ups and downs don't really matter. You know, a lot of people who collect dollars in the bank don't judge the value of their savings by the price of gasoline going up and down or the price of bread going up and down, right? Price of
True.
oil going up and down. They'll think of it that way.
Right.
Anyway,
Exactly.
so okay, well let's get into where we're at today, right? So it's October 2020. Boots on the ground. You deal with this stuff on a daily basis. You watch the charts. You have people coming in. You know, you get all the newsletters and stuff. From my vantage point, the price action's been a little bit kind of sideways, maybe even trending a little bit down. Are the good times over? Has this had its run, or is the best yet to come? What say you?
Well, I think the best is yet to come because the government's going to continue to spend more money than they take in. Deficit spending. We're waiting for another spending bill to be passed by Congress to support the economy. Our taxes are down. So, you know, gold likes debt and deficits. It runs hotter under that situation. We have negative real interest rates, and gold likes that as well. And we also have a weakening dollar, which is really what turbocharged the metals in July when gold ran from 1800 to 2069. We've seen a dollar rebound of sorts over the last 3, 4, 5 weeks, which has helped to pressure gold and silver a little bit lower than where we talked last time. But they're still in an upward trend. They haven't broken down into a negative or a downward trend yet, but we're in a short-term downward trend within a bigger upward trend. So I think this is just a pause that refreshes, basically. It's a chance for the market to consolidate, to shake out some weak hands, and to give strong hands a chance to get back in at a little lower level than we were at a month ago. So the trend is your friend, and the trend hasn't changed. It's still headed higher.
Yeah. Well, I mean, you look at a chart of the dollar and it's got a 107-year history of basically trending down, and gold is inverse to that. Of course, there's ups and downs along the way, but if you're in it for the long haul, which is what we call strong hands, you know, I'm buying, I'm not selling, I'm collecting, and I'm collecting over decades. This is my long-term savings, and like equity in a property, if I need it, I can borrow against it. We've talked about that in the past. So, you know, we're not really here to talk about portfolio theory, but it's important for people to understand. And again, if they're not even familiar with physical precious metals, this is not day trading, you know, or trading, you know, the paper. You've written a report for us that we have in our special reports library, realestateguysradio.com, called Physical Precious Metals, A Guide to Getting Started. So if anybody's interested in that, they can send an email to preciousmetals@realestateguysradio.com, and you can have that report completely for free, courtesy of Dana Samuelson. So let's talk a little bit about, you talked about some of it, but you know, maybe some of the fundamentals underneath, you know, because I'm not a technical analysis guy all that much, because I think that, you know, those are the people that are kind of momentum chasers. They're trying to get in and catch an up wave, and then they get out at the top, and then they wait for the down wave, and then they buy back in, and they're just trying to make money on the churn. I kind of watch the charts because when things dip, It's like, hey, that's a chance. It's kind of like watching the local store for your favorite supplies, and when they go on sale, you're like, okay, I'm going to go buy some. But what's going on out there fundamentally?
Well, fundamentally, we've got a situation where we're just in a quieter phase right now. Stock markets made a nice rebound, which takes a little of the wind out of our sails. The dollar, which had absolutely plummeted between May and August, September, has rebounded a bit, which is natural. Just like and precious metals have corrected down a little bit. We've had the most direct inverse correlation to the dollar in the precious metals markets that we've seen since July. And that's really what's driven these prices up and down over the last 8-10 weeks, more than anything else. We're also, a month away from a presidential election. And I
So I've
really,
heard.
yeah, kind of hard to miss. And, during the 2016 cycle, as Clinton would go up in the polls and then go down, or Trump go up in the polls, the metals were porpoising, gold was porpoising $100 at a time. Right now, it feels like everybody's just kind of hunkering down, waiting to see what happens. So it's getting a little bit quieter as we get a little closer to the election, which seems like a natural human reaction to me. I think once this thing is over, we could really start running again because the government's going to have no choice but to print more money. They're going to have to create more stimulus, and they just haven't done it yet. We've been waiting for it. Maybe good for the stock market in the short term, but the underlying fundamentals of the economy, which I follow pretty directly, especially jobs, which is the base building of the economy. Jobs growth has been weakening. It's still better than average, but we lost so many jobs. The rebound was sharp, but now that is moderating. And we're not going to get back to where we were. We have about 80% of economic capacity rebuilt from what we had 100% in February. We're not going to get that other 10 or 20% back that we need to get back to pre-COVID easily. This is the grind phase that we're in. And this is where the rubber really meets the road. And I think it could get worse than some people realize in the next 3 to 6 months as the reality of some of these economic business closures really, hit the road. Like Regal Cinemas said, they're laying off 40,000 people and closing 536 movie theaters, right? The airlines desperately need another bailout, or there's going to be over 30,000 people on the street there. The government's not going to let that happen, which means they're going to print the money. And the more money they print, potentially the weaker the dollar gets, potentially the higher gold and silver can go. And that's why the trend is still your friend.
Yeah, well, I mean, the reason we decided to do the silver series and we spend so much time on the Real Estate Guys radio show paying attention to precious metals, when you think, well, what does that have to do with real estate? Well, it's money. And if you're in real estate investing to make money, at some point you have to begin to save some of that money. And that's what precious metals does. So you use debt, which is currency, and mortgages to acquire the real estate, use the income to service the debt, use the dollars to convert into savings, which is precious metals, and then you hold for the long term, knowing that over time, as they print more dollars, both your gold and your debt, your gold goes up in dollars and your debt actually becomes easier to pay. And you've already secured the asset. So real estate and gold really do go well together. I think a lot of people don't understand that. I found this chart from Visual Capitalist, which I subscribe to. I'm going to try and share that with everybody because I think this is really illustrating, Dana, what you were talking about. And let's see if I can figure out which one that's going to be. I believe it's going to be here. And then there's your report, right? Do you see the report now, Dana?
Let's see. I see a precious metals guide page.
Okay, so that's the where your report is. Here it is. You see it? So this is from Visual Capitalist. I literally just got this morning in as we were prepping for this. It showed up in my inbox. I go, oh, this is perfect. But they put out these visuals which really make it very easy to understand what Dana's talking about. You can see here that this big green block here is how many dollars have been printed and how much debt has been added. It's big. Now over here, you can see how much gold was produced in terms of U.S. Gold coins and how much silver coins. Now, it used to be that these were completely connected to each other. In other words, our coins were made of silver and our dollar bills were redeemable for silver. I still have some of those old silver certificates. And then prior to 1933, it was the same thing with gold. And so a lot of people who are younger don't understand that gold and currency used to be one and the same, but they were separated kind of slowly, first in 1933, then in 1964, and then finally the tie was forever broken globally in 1971 with Richard Nixon, August of 1971. Since then, the amount of dollars in circulation have been able, and debt in the system has been able to just grow completely out of control. And I think everybody who looks around, who pays any attention at all, knows that it's completely out of control right now.
That's
So,
explode. Yeah.
Dana, when it comes to the pricing of gold and silver, you're saying the bigger this gets, it's a lot of pressure on precious metals prices to go up because you have more dollars bidding for a relatively smaller supply of metal. Is that the basic gist of it?
Yeah, it's or you can turn it on its head and say that the more the dollars they create, the less they ultimately become worth. They debase the currency every time they make more and more of them. And that is why precious metals tend to hold their value better, because you can't print more gold easily. And I can make a side comment here. The little gold cube and the little silver cube, the mint's production has been really high this year because of the run we've had. If this were last year's production numbers instead of this year's, those cubes would be a quarter or an eighth of the size of what they are right now. Well, the green block would be lower also, but it's just crazy how they can just create money out of thin air, trillions of dollars, but you can't make that much gold very fast. It's just impossible.
Yeah, well, that's Jim Rickards' whole argument. You know, he said at some point it's going to have to come back into alignment. And when it does, gold could be as much as $15,000 an ounce. The problem is, in a world like that, that's where, you know, bread is $100 a loaf and gasoline is, you know, whatever. And so the key to making this thing work is to have the gold and to have the debt through the real estate early in the cycle. And then once that thing finally adjusts, you should end up being able to out earn or outpace inflation. Because effectively, this is the definition of inflation, right? People say, oh, it didn't show up in consumer prices. It shows up in other places. And obviously, it's shown up in gold and silver for the last, you know, all of 2020, because we've had this huge run up. And so there is inflation. It's just not showing up in food and pricing, but it's definitely showing up in the system. Okay, so anyway, so I thought that was a pretty cool little picture. So let's talk a little bit about what's going on, because this is boots on the ground. You know, you're dealing with people day in and day out. And I can tell you, for me, I look at when the train is taken off, right? When silver was 11 and a half, $12, and all of a sudden it's 16, 17, 18, 20, 22, 25, 27, 28, 29. I'm thinking, oh my gosh. And I'm sprinting after the train, right? Taking every spare dollar I have, trying to get it onto the silver train before, and the train is just taking off down the station. I watched gold go, you know, from 1050 in December of 2000, I think 15,
Yep.
and just, you know, kind of up and down a little bit, but basically the trajectory was up, and it broke through finally the 1923 level, which was the all-time high set in 2011, I believe it was.
Right.
And then it pushed all the way up almost to 2100, like 2080 or 2060 something. And then it's kind of moderate. So I feel like the train has slowed down. And it's my opportunity. It's like, wow. And I'm still sprinting, like trying to get on the train before it takes off again. So you're saying, hey, I think the best is yet to come. I think the train is going to take off. So, but what are your customers saying? What are you seeing, you know, at the street level? Are people buying? Are people selling? Are people taking a wait and see attitude? What's happening?
Well, we have a couple different types of investors. We're lucky because we have some investors who are really smart, and they know.
And then there's guys like me.
No.
You have your really smart investors, and then you have that guy.
Well, we have some really seasoned investors who've been through cycles before, and they love to buy dips like this.
Yeah.
So what tends to happen is we have been getting some really big sales from individual clients, where a lot of our smaller customers chased the market higher when it ran, like going after the train. And now that it's pulled back, they're, you know, a little disappointed because they might have bought a little bit higher and the steam is out of the engine right now. But the fact that the prices have pulled back has made some of the big hitters step into the plate. We've got one client who said, I want to get my bullion done before the election's over because I think the metals will start to run once the election's done. And we're in a bit of a quiet phase right now. So you're right. You have a chance to get back on the train. Prices are lower. Your dollars will buy you a little bit more silver and a little bit more gold than they did a month or 8 weeks ago. And I think this window of opportunity won't stay open that long because we know what's going to happen. The government's just going to, like I said, print more money and debase the currency, which is good for precious metals.
How
And
much of a role, Dana, do you think that the pause in the stimulus negotiations, right? I mean, they were kind of chugging along, and then Trump goes into the hospital and he's tweeting, "Hey, get something done." And then he comes out and Pelosi draws a hard line, say, "I'm only going to do it if you send a bunch of money to these blue states." Trump says, "I'm not going to do that." And so the whole thing's on hold until after the election. Did that have any impact from your perspective, both in talking to your suppliers and watching your charts, and also conversations with your, your customers? Were they feeling like, okay, this isn't going to happen. These guys are going to just tighten the purse strings. They're not going to print trillions and trillions of dollars? Or do you feel like people just thought that was a timeout and it's going to happen eventually?
well, it is. I think most people realize it has to happen eventually. That's one aspect of it. A second aspect is the uncertainty of it and the batting of it back and forth. Investors don't like uncertainty because it changes direction. The stock market's been a bit schizophrenic. Trump can send out a tweet and it could go up 500 points. He could send out another one, it could drop 500 points. And that's exactly what happened the other day when he said the negotiations were going to be off until after the election so they could get the Supreme Court justice installed. There's only so much time they have to do this in the next couple of weeks. So investors like to see a little bit more certainty, and this dysfunctional government that we've had and we're probably going to still live with for the time being, no matter who wins. I mean, it's just not good for the overall economy. We have to come together to make compromises to get things done. That's how our government has always worked all these years. And it's just not happening now. And I don't hold hope out for that to continue to get better at all in the next 6 months.
So I have maybe a little bit of a different take. And so I feel like this is the new TPP plan: Trump, Pelosi, and Powell.
Yeah.
Okay.
Yeah.
So Trump wants to do stimulus. He wants to do Space Force. He wants to help all the great companies. He wants to spend money. Jerome Powell came out and said, "Hey, we need the government to spend more money."
Exactly. He said more is better than less.
Correct. Neil Kashkari, who is a Fed governor, came out and said, "We need $3.5 trillion." Now, just for people that don't pay attention to this stuff, just to put this in perspective, in 2008, the Fed's balance sheet was $800 billion.
Right.
To solve the 2008 financial crisis, they took it from 800 billion to 4.5 trillion.
Right.
When this crisis came, they had gotten it down to about 3.7, as I recall, and then they piled on another almost 3.5 or 4 and got to about 7, and that's kind of where it's been sitting. Kashkari is talking about another 3.5 trillion. Now, he's saying that's what the government needs to spend, but the government doesn't have any money. The government gets its money from the Fed. Right. The Fed's going to step in and buy the bonds with money that it prints. So that's kind of the way the game is played. So anyway, so Powell wants to do. Pelosi is asking for 2.6 or something like that, or 2 point whatever it is, and Trump is like, no, 1.6. The point is that they're not disagreeing in the direction.
Right.
They're only disagreeing in some of the details, but at the end of the day, there seems to be tremendous consensus by both the central bankers and the Congress and the White House. And I can't imagine if Biden wins the White House that it's going to get tighter.
No.
Right?
It won't. No, absolutely not.
Yeah. So to me, I agree with you. I think that is all extremely bullish for gold if you look at gold denominated in dollars. And I think that we're probably sitting at a time where the train is chugging along slowly, giving the people who missed it or want to buy a better seat a chance to kind of run behind and get on board before the thing takes off again.
Yeah,
That's my
absolutely.
take.
Yeah,
Is that,
I agree with you completely. The metals tend to go two steps forward, one step back. And this is the one step back phase. And it tends to break the psychology or the desire to have the metals because, oh, it's coming down now. But that's really the best time to buy. You know, the retail investor likes to chase a market higher, and the seasoned investor knows to buy the dips. And this is a great buying opportunity, is the way I look at it. At 1950 gold, 1900 gold, silver ought to be $35 an ounce, not 24, 25, or even 23. But we still might see a little price vulnerability in dollars. It's not impossible for gold to go back to 1800 even, or silver to go to 21. But I don't think the market's going to get that cheap. I don't think anybody's going to let it get that cheap. I think we've already hit short-term bottoms in gold at about 1850 intraday, and in silver, it's bouncing off of 23 and a quarter, 23.10. It's held up there. So I think that we've got base building, real solid base building just below where we're trading right now.
and hopefully, at least temporarily anyway, they've dealt with the spoofers over at JP Morgan, and they won't be messing with the pricing too much. But I'm sure that there's shenanigans going on. But at the end of the day, this is just a freight train, I think, that's going to be hard to stop. And there's so much currency being printed globally that it's gonna have to land. People are going to be looking for a safe place, and bonds is not going to be the place because interest rates are so low, right? You buy
Right.
bonds and the rates go up, you're toast. So I think it's going to end up being the place where people go, okay, we need to wrap this up, but I want to ask you one last kind of topical question, and that is, we've talked a little bit about the price direction and some of the fundamentals underneath, and I think those things are important. We've talked a little bit about what your savvy and maybe less savvy investors are doing and thinking. But what's going on in terms of supply? Are you having any supply issues? I know the mint has been having record sales. I know we're at that time of year where they run out of the 2020, and there's that blank empty spot where they don't have enough, and then you got to wait till the 2021s come in. And then, so what's happening as far as supply? Having any supply issues whatsoever?
No, supplies are good right now. The metal's flowing freely. There's no material delays whatsoever other than logistics, just getting it shipped if you need to have it shipped. There's on-the-shelf stocks across the board. We still have some problems with 100-ounce silver bars, but the 1-ounce sovereign minted coins, privately minted coins and bars, gold sovereign minted products, that's all flowing freely. But you said it correctly that we're only a couple months away from when the mints change over, and that typically creates a 2-week to a 4-week hiccup in supplies.
And premium spike, right, at that time.
Well, it could happen if we get a demand surge, if there's enough people who want to buy product that isn't available. So we could see another period of slower deliveries and higher premiums. Premiums have collapsed almost back down to where they were pre-February or March. They're still a little bit higher. They may not ever get back to the low premiums we had prior to the run-up in the metals and the COVID closures. Now, you got to remember, gold tends to be priced in percentages and silver in dollars. And the premiums on silver is about $1 to $3 higher than we were paying at 1850 or less silver, but at $24, $25 percentage-wise, an extra dollar really isn't that much more percentage-wise.
Right.
So, and the bids are there too. So we're paying more than we normally would to buy as well.
So let's go up, and I know this isn't necessarily your thing. Our mutual friend Brian London is the metals and mining guy, but Barrick just came out and said, hey, there's going to be some supply issues. The gold mines aren't producing as much as they used to. Overall gold production is down. During the period of time where gold prices were very low and silver prices were very low, a lot of the companies weren't able to do some of the exploration they would normally do. So they're kind of high grading. They're taking the low hanging fruit, and the stuff that now costs more to get is worth getting. But then there's also been some mines internationally because of COVID-19 or whatever reasons that have been completely shut down. Do you have it from your perspective? And I'm not asking you to be the expert because I know it's not necessarily your thing, but do you have any visibility from your perspective besides just being able to fill your orders from whatever's warehoused and kind of drawing down inventories, is getting that replenished from the mines. Do you have any visibility whether there's going to be a break in the supply chain at the mining level?
I don't see that myself, so I'm really not the best person, the most qualified person to talk on that particular aspect of the supply chain. But I do know that virtually every ounce of gold and silver that hasn't been used in electronics or other industrial components, once it comes out of the ground, it stays above the ground. It could
Right.
just get repurposed. So we might have gold jewelry that's turns into scrap that gets refined and gets turned into gold eagles by the U.S. Mint or the Canadian Maple Leafs. So there's other supply.
So at the
Everything
right price, it'll come to market.
right, right. And
Yeah.
we have had some people who are taking advantage of the higher metals prices and selling because they're making nice profits. People that have had gold for 20 years, 30 years, or especially silver at these levels. We're seeing people come out of the woodwork selling, but I think they're selling a little too soon. We saw the
Well, I
same.
mean, that's personal, right? If you're 85 years old, you're like, you know what? I don't have time to go through another cycle. I'm going to cash out now and enjoy my life. If you're 35 years old, yeah, that's probably maybe a mistake based on the fundamentals.
Yeah, exactly. I just, the 2 hours before we got on this call, I spent buying an estate over the counter that someone had accumulated for 20 years. And the heirs don't want the metal, they want the money, and they just don't understand.
They
They don't
don't.
understand. Young people don't get it sometimes.
Well, that's why we do these series. So this one's been a little long, but there was a lot to talk about. We have a lot more we could talk about. But if you're out there watching this, and again, you're not familiar, Dana and I did, I think, a 9-part series, or maybe it was 13 episodes. It was a lot, and it was fun. But we covered a bunch of stuff. Silver series at realestateguysradio.com, and then if you want Dana's report on physical precious metals and how to get started on all of this, precious metals at realestateguysradio.com. And then I'm heading to New Orleans, and I'm going to be there live with Brian and helping MC the New Orleans Investment Conference. Normally we all get together there, but I'm sure that we're both participating, and I'm sure there's going to be some mining talk. So maybe by the time we do this next month, I'll have a little more insight on the mining side of things.
Yeah, I can see exploration creating some more channels of supply, but it's a long, drawn out process. It takes years. So
Yeah.
it's not going to happen fast.
Well, I just learned a long time ago to pay attention to supply and demand and capacity to pay. And if you put those three in a blender, and you can kind of figure out which direction things are going. But to me, it seems like there's a lot of upward pressure on the dollar price of the precious metals. And this little timeout had me curious about what a guy like you would have to say. So thanks for all your insights. Very helpful. Appreciate it. We'll do it again next month.
Thank you, Russ. Always great to talk to you, and best wishes. And I wish I could see you in New Orleans next week, but I'll be there virtually on the computer. So,
Awesome. All right, buddy. Thanks.
thank you.